Very good evening to all of you, to all our members, and very warm welcome to this very important session on key issues and audit and assessment in GST. To start with this very important session, I request Mr. Shrikant Badiga, Regional Vice President and Director for Phoenix Group, to kindly give welcome remarks. Please, sir.
Thank you very much, Shrikant. Once again, welcome. Good evening, Mr. Abhinav and Mr. Karthik from BDO. We take this the privilege and hearing from you as consultants, one of the reputed consultants, on our ever-burning, never-ending issue GST. So it's glad that this GST was, as you know, is one nation, one tax. I take the pride. It was launched on July 1st, 2017, if I'm not wrong. So that happens to my birthday as well, July 1st. So a very good date to remember with. Nevertheless, we have been seeing a lot of developments happening in the last couple of years. In the initial stage, it had some two-thing problems like networking and all. Now everything is set, thanks to the Ministry of Revenue and all the allied officers who have been working throughout. And most importantly, I would give this honor to all the consultants and the advisors like you people who have been supporting the industry throughout, hand-holding them and guiding them, understanding their policy, interpreting the interpretation of the new amendments. Even the last couple of days, a lot of amendments have come in, especially in service tax, and still we have a lot of queries to understand for ease of doing business, basically, I would say. So I'm sure this particular webinar on what the main essence of this key issues and audit and assessment and GST, which is a very crucial thing. The last couple of years, yes, government was a bit flexible. Even the government was flexible, the business houses were very careful in filing their GST forms and all. And I'm sure even this year, the filing would be much easier because most of the thing is online. And I, even personally at our business level also, at Phoenix Group also, we've been observing a lot of developments are happening while filing on the online. Even though our consultant advisor has been educating us on a day-to-day basis. I'm sure I'll not take much time because we need to hear a lot of things from you. And our member companies, certainly, if they are able to post here on the website for the queries, it's fine. Otherwise, kindly be free and to post your queries. And I'm sure BDO will also answer your queries of this particular webinar. So once again, good evening to every one of you. Welcome on board, Mr. Abhinav and Karthik, and you can take on the mantle now. Thank you, Shika, for giving me the opportunity to give the opening remarks. Thank you so much.
Thank you so much for your time and for the
pleasure is always mine. Thank you.
Thank you so much, sir. Now it's my I take this opportunity and my privilege to introduce our esteemed speakers for the day. So we have Mr. Abhinav Srivastava. Mr. Abhinav is a partner with the indirect tax practice and operates out of Hyderabad office. Prior to joining BDO in India, Abhinav worked with larger accounting firms and has over 12 years of experience specializing in direct taxation. He has worked on several assignments in the areas of tax structuring, due diligence, diagnostic reviews, litigation across various sectors like ITs, pharmaceutical, healthcare, media, education, and so on. Abhinav is also actively involved in advocacy with policymakers representing various industry association and chamber. He has also authored various articles pertaining to indirect tax in tax-related publications. And we have Mr. Karthik Mani. Mr. Karthik is a director in the indirect tax Bangalore practice. He began his career at Grant Thornton India LLP and worked for over 4 years prior to joining BDO. Karthik has more than 12 years of experience in the field of indirect taxation. His areas of functional expertise, including GST, service tax, customs, and SEZ. He has assisted large manufacturing clients having diverse business in pan-India GST audits and assessments. So it's a privilege and honor to have the experts from video. And I really welcome both of you. And I request Mr. Abhinav to kindly take over. Thank you.
Okay, thanks, Shikha and Shrikant for introduction. So what we will do is that we will approximately take 1 hour for the session, and then the last 20 minutes would be spent on Q&A. The request would be to just to hold on to your Q&A till we complete our presentation, and then we can take all the questions at once. Now, so while we will speak on, and the two topics, as already mentioned, the agenda are key open issues on the GST law and the practical issues pertaining to audit and assessment. So while we will speak on these topics in the next couple of minutes, I'm sure many of you are aware that just yesterday late night, number of new notifications have been issued by the government under GST law, and there are a lot of circulars which have been sort of issued, and some of those circulars have a very sort of wider relevance and applicability, and some of those issues. So many of the notifications, for all practical purpose, give effect to the recommendations of the GST Council, the 47th meeting which happened last week, and there are some circulars which again are linked to those notifications, but some of the circulars also talk about changing the way you disclose certain transactions in your returns. Plus, there is also some literature on how do you compute interest in case there's a delayed payment of tax and so on and so forth. So while those topics by itself will, I think, take a lot of time, and I think we should have a separate session sometime later, but just want to give you a heads up that a lot of changes are happening even late last night, and this is in sync with what Shrikant just mentioned, that it's a never-ending sort of law, and that's how it is, right? So I mean, every second month we'll have these these bunch of notifications, and then we sort of spend time in trying to decode their impact on the overall industry. Now, with that quick intro, I will come to the presentation, and the first bucket is the open issues under GST law. I will share the deck once before I sort of proceed further. So just give me a second.
Meanwhile, I request all our members and guests, all the participants. So if you have any queries, kindly post in the Q&A session, and later during the Q&A session, speakers can take from the queries. So kindly post your queries in Q&A box. Thank you.
Yeah. So, so the first sort of section in this deck is about some of the key statistics which would be relevant, for your sort of consideration. First is that you must have seen a lot of media reports about increasing GST collections on a month-to-month basis, and from a number standpoint, the GST revenue has grown almost by 30% in the last 1 year. And while there are a lot of people who will say that this revenue is increases because of inflation, which is partly true, but is also because of other factors, including the way audits and assessments have happened, right? So government has been able to maybe streamline those audit and assessment sort of measures, and because of that, also a lot of additional revenues getting collected. In fact, in one of the recent press conference, Revenue Secretary made a statement that if we get our audit and assessment right, the way they want it to happen, the average collection per month, which is today around 1.4, 1.35 lakhs crores per month, would go up to 1.5, 1.55 lakhs crores. So that's the expectation as far as government is concerned from audit assessment. Also, as far as GST rates are concerned, again, there has been a lot of debate around. There are too many GST slabs. There is 28%, 18%, 12%, 5%, and that leads to a lot of interpretation issues, a lot of confusion, a lot of disputes on the classification, right? And there has been a demand that these 4 or 5 slabs should be reduced to max 2 slabs. One could be a lower rate, one could be a normal rate. Now, the government is actively considering that proposition. The only catch is that they want to ensure that the total revenue collection doesn't get negatively impacted because of this slab restructuring. And therefore, the challenge is right now on which item to be shifted from say 28 to 18 or vice versa, because they will have to ensure that they don't end up losing the revenue. So again, I think in the next couple of maybe months or maybe at least a year more, we can see a situation where the number of slabs might get reduced. But as of now, this is the situation. And you can see from the stats that out of those 4 slabs, 18% slab gives the maximum portion of revenue. So 65% of the tax revenue comes from 18% slab. So they have to be mindful of what's happening as far as the different tax rates are concerned. The next one is advanced rulings. Again, this is an area of concern raised by the industry, that there are so many advanced rulings, there are so many notifications which have been issued from time to time, and in many cases, advanced rulings are contrary to each other, and that puts the companies who have multi-locational setup in a particularly tricky spot. And there has been demand of that we should have a centralized advanced ruling authority, so that in case there is a contrary ruling on a similar matter in different states, at least that issue can be put to rest by a central advanced ruling authority. Let's see what happens. But as of now, as we stand today, there are already more than 2,000 notification circulars and rulings, and this will only increase till we get sort of any sort of clarity on centralized ruling authority. Also, there are a lot of notifications. As I mentioned, there are a couple of notifications which were issued just last evening, coupled with some circulars. And again, there are more than 900 plus such notifications of circular. So these circulars keep on sort of being rolled out every now and then, and keeping a track of these circulars, the impact of these circulars notifications is not an easy sort of task, and therefore industry is also grappling with that kind of challenge. Though it's the other extreme of the pre-GST regime. I mean, in the earlier days before GST, we only used to have one budget in Feb of every year, and the complaint was that why should we wait till budget? I think if there is some amendment which is important, that should happen even in the middle of the year. So now we have a situation which is the other extreme. Every 2 months we have some recommendation that is there, and there are notifications which are being issued. So, but that's where we stand. So there are a lot of notifications, and the good part is that it means that government is quite responsive to the demands of the industry. They take feedback from various stakeholders, and wherever possible, they do make those changes. For example, in the recent notification which came, I think last night, or even the GST Council meeting recommendation that you will be allowed to use GST balance in one state to discharge your say GST liability in other states, subject to certain restrictions. Now, that was one of the long-standing demand of the industry, and now they have agreed to do that. So the downside is that there are too many notifications, but the upside of but the silver lining is that it means they are quite responsive to what's happening, and they want to streamline the law as early as possible. As I mentioned, that the collections right now are at around 1.4 lakh crores per month average collection. It will go up to 1.55 very soon, and they are working in that direction. Now, coming to the policy level issues which are under deliberation right now. The first one is that there is a group of minister, GOM, which has been formed to discuss about the structure of Appellate Tribunal. As you're aware that even after 5 years of GST, we still don't have a sort of Appellate Tribunal. So what happens that in case there's an adverse order by, say, commissioner or commission appeals, there is no option but to go to the High Court if you want to litigate. Now, with that kind of sort of structure, it is becoming very difficult for people to work in this ecosystem. Therefore, there has been demand by the industry that appellate tribunal should be in place, and I think now there is some discussion happening. I think what is debated right now is that how will the tribunal function, because whether it will have 3 members, 1 member from, say, central government, 1 member from state government, 1 member from judiciary and all that, and what happens if there is a difference of opinion, whether central government representative will have a veto power the way you have in GST Council. So all those issues are being discussed right now, and let's see what exactly is the final shape of this appellate tribunal when it is formed in the next couple of months. Also, on the inclusion of petrol, crude in under GST, this again has been a demand since beginning. But if you see again the recent media reports, it is unlikely that a government will include these products under the ambit of GST law. It's a very sensitive issue even from a political perspective, and in fact, what they have done recently is that they have for companies which made fall gains because of increase in petroleum prices, they have increased export duty on export of petroleum, diesel, etc. So, and it's a huge revenue earner for the government right now. So this issue is there. Industry has been demanding that you put it also under the ambit of GST. Right now, the government is saying that this will happen, but not in the immediate future. So we just have to wait for some more time before we see this, as a reality. Next one is cryptocurrency. So again, a very very hotly debated topic. While the cryptocurrency per se is down, market is down right now for multiple set of reasons. But as far as taxability is concerned, so there was a recent, I think, guidelines which are issued by, by the direct tax or CB, I think Central Board of Direct Tax, CBDT. As far as GST law is concerned, there is still no clarity as such. The debate is whether this cryptocurrency or crypto should be treated as a currency or it should be construed as an asset. Because if you say it's an asset, then when you buy and sell the currency or asset, you will have to pay GST, say at 18%. If you say it's a currency, then typically sale and purchase of currency is not liable to GST, provided that currency is recognized as currency by the RBI. Now, in the current case, RBI so far has not recognized crypto as a currency. Therefore, even that's a gray area, or that's a tricky area. In any case, whatever commission is being earned by those intermediaries who facilitate, sale and purchase of these cryptos, that commission is liable to GST. And you must have seen a lot of media reports, I think, few months back, where authorities had initiated certain proceedings against some of those players, asking them to pay GST at least on the commission which they have made on these transactions. But we still don't have any official clarity on what is the government stand on these transactions from a GST applicability standpoint. Then taxability of online gaming. Again, this was an issue which was discussed in the GST Council in the last meeting last week. And there were 2-3 issues. The first issue is the rate. I think there is a consensus that this should be taxed at 28%. So that's I think that's more or less settled. But I think the government of Goa, the finance minister of Goa, sort of wanted further discussion on this issue, especially from a valuation standpoint, because one view is that this 28% should be applied to the entire money which is collected from the participants, including the winning prize. The other view is that the GST, even if it is applicable, should not be levied on the entire entire money collected. It should be only on the commission or the service fee of that person who is providing that platform. So again, I think it is stuck primarily on the valuation angle. And again, the government has asked a group of ministers to to study this, and I think in the next 2-3 months you will see some clarity on this aspect also. The next one, which is again very important, is the discussion regarding now. If you see or if you are tracking the developments in the recent GST Council meeting, or I mean even earlier, now they have allowed they have allowed, say, a CGST cash balance in one state to be used for discharging CGST cash liability in other state. So example, if a person or if a company has offices, say, in Hyderabad as well as, say, in Mumbai, and they have some input CGST balance in Maharashtra, and they have an output CGST liability in, say, Telangana or Hyderabad, they're allowed to transfer the input CGST balance from Maharashtra to Telangana, subject to certain conditions, and then they can use that cash balance to discharge the liability in Telangana. So this, but this is only for CGST and IGST, not for SGST or state GST. Now that facility is only there for cash balance. So this interstate fungibility is only there for cash balance. For credit balance, that facility is still not there. And therefore, there has been a demand by the industry that at least for CGST and IGST, which is a central tax, you should allow this fungibility. And I think we are hoping that something on this also will be reality very soon. Let's see what exactly is the shape and form when the notification is issued finally. Also, enforcement. Okay, so what they are now doing is that you must have seen a lot of companies getting notices, a lot of notices from multiple authorities in the recent past. My colleague Karthi will also talk about some of those notices in more detail after a couple of minutes. But there have been a lot of notices now, and so what they are now doing, because there are also a lot of pushback from the industry that they are getting notices from the same on the same issue by multiple authorities and all that, so on and so forth. So they're trying to bring some, and even, say, people who have been paying tax are getting bombarded with a lot of notices. So what they're now saying that they will issue up, or they were working on a proper SOP for enforcement, and they will, based on the machine learning and AI tools, which is your tech platforms, they will do a profiling of the taxpayers, and based on the profiling, for high risk cases, they will obviously have different kind of measures, and for low risk cases, they will have a different kind of approach. Plus, what they're also saying that, especially for MSME, they will have a systematic, grievance redressal mechanism. Plus, they also want to streamline the entire dispute settlement structure. So, so they are working on on this issue. They are aware of what is happening at the ground level. And what they are trying to do is that with the help of technology, they will do a profiling of these SSEs, and they will be focusing primarily on high risk cases, and that high risk category would be determined by the help of these tax tech tools. So let's see what eventually happens, but at least there is a thought process that their energies have to be channelized only in cases where there is a generally a high risk a scenario, and not in all the cases. So that's, again, this is not an exhaustive list of all the issues, but some of the issues which are making headlines. So that's a broad list of those issues. Now, talking about the other issues. Okay, so interpretation issues. Now, if you see, the first one is the cross charge of expenses within the same PAN, and we in a very layman term we call it head office branch office transactions. So what is happening now, that if you have a multi-location setup, which means you have a head office, say, in Mumbai, and branch offices across India, authorities are taking a position that head office is providing some support services to branch offices, and even on those transactions, there should be a GST, though they are part of the same legal entity, but since these are two separate taxable persons for the purpose of GST law, therefore, there has to be a GST on that. Now, this issue was not there prior to GST regime. So under service tax, it was a centralized registration, so that was never a botheration. But now, post GST, since every state has, you'll have to have a separate GST number. Therefore, your branch is a separate taxable person vis-a-vis head office if they are in two different states. And therefore, all these issues have come into picture. It all started or got triggered by advanced ruling in the case of Columbia Asia Hospital. And then there is a recent also ruling of Cummins India. So in both the rulings, a lot of things have been discussed, which could be a source of botheration for the industry. Now, if you see the broad structure of this entire dispute, so there are two kinds of expenses. Expense one is, say, head office incurring any third-party expenses. For example, they will pay to auditors, they will pay to advertisement, and they will pay rent and all that. So those are third-party expenses. Those vendors will raise an invoice on head office, and then the issue is whether head office should cross-charge that cost to the branch offices, because ultimately cost has been incurred for branch offices, or the GST which has been charged by the vendors should be transferred, or the credit of that should be transferred to other locations through a ISD route. That is the first bucket, which is third-party expenses. The next bucket is your internal management costs. So, for example, there is a CFO who is sitting in head office, and the argument taken by the authorities, including the advanced ruling authority, is that the CFO or the HR head or the procurement head is providing services to branch offices, sitting from HO, and therefore to that extent, HO should raise a notional or internal invoice to branch for the services rendered by the CFOs and the management, and on which GST should be payable. Now, obviously, the counter argument is that for these salary costs is that the CFO is also the employee of branch office. So how can you say that CFO is providing any service to branch office, because there's no GST on services provided by an employee to the employer? So those disputes are going on. In a couple of cases, notices have been issued. In some cases, we have seen companies paying tax also. But even if you pay tax, the issue is valuation. On what value you will pay tax, because how will you ascribe a value? Now, for example, a salary cost of CFO. Will you allocate his salary in the proportion of branch turnover, or say a salary of procurement head? Will you allocate his salary based on the turnover, or you will say that since his primary responsibility is procurement for the plant, therefore his entire salary should be cross-charged to the plant or the location of the plant? So all these are debatable issues for which there is no clarity as of now. In case of third-party expenses, the issue is whether you should do a cross-charge, which means raising an internal invoice or debit note from head office to branch office, or you should transfer the GST credit through input service distributor route. Now, again, there is in the Cummins ruling, they say, or even Columbia Asia, they say that for certain third-party expenses, you should do a cross-charge. For other category of expenses, you should do a ISD. It's a very thin line, and they're saying that for expense like rent, you should do a cross-charge. For other expenses, you should do ISD. Now, and this only makes life more complicated. So the expectation is that, and this issue has been going on for the last few years, especially after this Columbia Asia ruling, and therefore the expectation is that government will eventually come out with a detailed circular clarifying on the taxability of these kind of transactions, including how to transfer the credit from head office to branch offices. And even if they want to tax, they should have a very clear guideline on valuation, because even if you want to tax, how do I value the transaction? What is the mode of transferring the credit? Is all those questions also become relevant from an operational standpoint. Coming to the next slide, which is your now this again is one of the most widely debated topics, and I think it has a very wide relevance in that sense. So there is a clause under the GST Act, and this clause or similar clause was there in the service tax law also. So this issue is not new per se. And the clause says that, so GST is levied on supply, and they have defined the term supply, and it includes agreeing to tolerate an act. It's a deemed supply. Now, and the best example, if I may take that example, is non-compete fee. Okay, so if I if I agree to not to compete in a business with you, and for that I get a fee, that kind of situation can be part of this clause, or can be covered under this clause. And because of this clause, the typical transactions which come into into sort of limelight are LDs, notice pay recovery, penalty, check bouncing charges, and foreclosure charges. Right, 5 or 6 kind of transactions keep on coming in every second, third advance ruling. And if you see, the argument is that so the argument to say it is taxable is, so if when I recover LD or penalty, I'm tolerating a default of the service provider, and therefore that penalty should be liable to GST. That's one argument. The counter argument is that there is no agreeing to tolerate an act. It's like a penalty, like a deterrence. So I'm not agreed to tolerate that act. It's just that it's a deterrence which has been given in the contract, and there's a penalty for that. So I mean, between these two arguments, again, we have seen a lot of disputes. If you see, at least under GST law, most of the rulings as far as LDs is concerned are in favor of the taxpayers. Most of the rulings for notice pay recovery are against. Though in case of notice pay, a lot of companies have paid up the tax because they don't want to dispute with the department for small amounts. Penalty again, now penalty you have to see the exact facts, because if the penalty is, say, for delayed payment of invoice, then there is a specific rule which says that penalty, late fee, interest because of delayed payment of invoice, that you should add in the value of an underlying service. So that is one penalty. But otherwise, in a typical default scenario, the penalty is nothing but a deterrence, right? And therefore, to say that it is a consideration for agreeing to tolerate an act, I think is slightly a conservative approach. But again, people are getting notices and they have to deal with that. The similar approach has been taken for check bouncing charges as well as foreclosure charges levied by the banks. Again, the argument taken by the authority is that the banks agree to tolerate the act of you not honoring your check, which to my mind is slightly a far-fetched argument. But then from a ground reality standpoint, this is the view taken by the authorities for sure. So I think it's high time that government now comes up with a clarification and make their stand on these kind of transactions very, very clear. Okay. Then the next slide is employee recoveries. Now again, this is almost every company will have these issues either in some form or other. So, and the typical recoveries which come into sort of limelight are canteen services, transportation services, as well as insurance. Now, and the debate is around three issues. Issue one is whether these recoveries are taxable. That's the first point of contention. Second is if they are taxable, on what value the tax should be paid. Okay, and if the tax is payable, then whether the company can claim input credit of the charges that they have paid to the vendors at the back end, right? So these three issues keep on getting debated. The view taken by the companies who have not paid tax on these services, provided they've taken a conscious call, is that providing insurance to the employees is not my business. I'm not an insurance service provider, and therefore to say that I should pay GST on this recovery, saying I'm an insurance provider, is something which is not a correct statement to make. The same argument has been taken for transportation and canteen also. Plus, they are saying that it is not my business to provide canteen services or transportation services to my employees. This is, this is done more as an obligation, but my business is to sell goods, provide services to my clients. This is not the business. And under GST, only activities which I do as part of my business or in the course of my business are taxable. So these kind of arguments are taken in support of the position that this is not liable to tax. Though again, it's a very debatable area. There are a couple of companies who actually pay tax, especially on canteen and transportation recoveries. But even if you pay tax, the issue is on what value, because in many cases, if I'm paying say 150 to my vendor for the meal, I recover only rupees 50 from my employee, or say rupees 10. So whether you will pay tax on rupees 10 or you will pay tax on 150 to pay tax, then employee is a related party of the employer as far as GST law is concerned, and therefore those kind of transactions have to be taxed at the market value, at the fair value. And therefore, if I'm paying 150 to my vendor and I'm only recovering rupees 10, most of the companies, if they have paid tax or wherever they have paid tax, they have paid tax only on the actual recovery and not on the fair value. So again, that's an area of debate where we don't have any concrete answer. Again, we have situations where the company will ask a caterer to supply food in the canteen. They will give free space to the caterer. They will give the LPG connection. They will give a lot of other infra support without charging anything. And because of that, the caterer who would have otherwise charged say rupees 100 for a full meal, would only recover rupees 40 from the employees. So the issue is whether the caterer should pay GST on 40 or 100, because eventually he's getting 100 only in some other form. So therefore, if they clarify on these issues, a lot of these points of debate would be settled. And in most of the cases, the amounts involved are not large enough in the overall scheme of things, but they still create that sort of nuisance. And therefore, specific clarity on some of these issues would go a long way in ensuring that there is less of litigation for these kind of transactions. Okay, I think Karthik, I know I am running out of time. Just give me 4 or 5 minutes more. Next is business promotion. Again, now this again is a point of debate especially for companies who spend a lot on these marketing and business promotion expenses like FMCG, pharma, etc. Now, the law says that if I'm incurring any expense in the course of my business, I should be allowed to claim ITC of GST which I have incurred on those expenses, and that's the argument. But authorities say that that these if you supply say diaries to distributor, and they say it is either a gift or it's a free sample, or it's like an incentive which you have given to them and because they have met their sales target. And in some cases, if there is a commission which is payable, or there is an incentive which becomes payable to the distributor, and that incentive is given to him partly in the form of cash and partly in the form of some gift, then the issue is whether the value of gift will also be included in the overall consideration on which a distributor is supposed to pay tax. So all those issues crop up. There is also a circular on this matter, but the circular is not very detailed. So they have simply mentioned that free samples and gifts you will have to reverse input credit. The counter argument is that when I supply or when I incentivize my distributors, it is not a gift. It is a reward that they get or they're entitled to because they have met their targets. So it's not a gift. Also, if you see gift is normally which is voluntary and it typically gets consumed by the recipient. Now, when I give a souvenir or say a brochure to a distributor, it's not a gift for him in that sense because he's not going to use that himself. So everything which you give to distributor is not a gift. Every item which you give to a distributor is not a free sample. So instead of painting everything in one or two sort of buckets, I think we have to be very specific on how do we categorize that supply and then accordingly take a call whether it is whether I have to reverse ITC or not. Also, all these restrictions of ITC apply only for goods which are supplied free of cost or as free sample. If I'm rendering services, okay, or if I'm supplying services, there is no such restriction. So I mean, if you see the rulings, I think most of the rulings say that you will not be allowed to claim ITC of business promotion expenses because in many of those cases, the goods and the underlying goods are supplied free of cost or as free sample to the distributors or to the retailers. But I think a more detailed circular is required, which can discuss each item one by one with specific reasoning. And then I think it will be more objective way of dealing with this kind of issue. I think there's one more slide. Yeah, just one more slide. So the last or this slide is about CSR. Now again, CSR is a mandatory requirement for a lot of companies where you have to contribute, I think, 2% of your net profit towards CSR expenses. And the issue is that whether I can claim ITC or GST, which I have incurred on these CSR expenses. Now, there are a couple of questions which have come up for discussion when this issue was taken up by the authorities, advanced ruling authorities. One is that, is it, when I incur CSR, is it part of my business activity? Answer is arguably yes, it is part of my business activity. The next question which has been debated is that, is it essential for me to incur CSR for me to commercially operate that business? The answer is probably no. I can still carry on my business without CSR also. The third question which has come up for debate is whether CSR is a mandatory requirement without which I can't even lawfully carry my business. Now, so the answer to that is that it could be mandatory requirement up to 2% of a net profit. And therefore, even if you take an argument that I should be able to claim ITC because it is mandatory requirement as per the law, and therefore therefore there is no restriction. I think that argument can be valid only up to 2%. So if you contribute, say, 4% of a net profit towards CSR, okay, that argument that I should be allowed to claim ITC because it is mandatory as per the law, that argument will apply only to the extent of 2% of net profit. The remaining 2% that you have incurred, and if you have purchased any goods against that 2% bucket, then I think that argument gets diluted to that extent. So again, CSR is a issue which has been, there are rulings which are contrary to each other again, and that's the reason why we mentioned in the start that we should have a centralized advanced ruling authority, because you can't keep on tracking these contrary rulings and then trying to take a view which is uniform across locations. So that's important. And the last slide is, I think, is more on the compliance. So you see that the return revision is not allowed. We have seen a lot of cases where while filing, so one, I think you are allowed to make some amendments, but 3B is something which is not allowed to be revised. And we have seen cases where by mistake, people have put extra zero, while disclosing their numbers, and that has resulted in, huge sort of extra cash outflow. And then because of multiple reasons, getting that money back is not that easy. So they should allow the companies to revise their returns. I think there was some statement in the GST Council which talked about allowing companies to revise return, but we haven't seen any concrete proposal on that. Maybe in the next few days we will have something more on this. Then this reconciliation which happens every month, which is 2A or 2B versus 3B, I think that still takes a lot of time of all the companies. And even if you have the best of ERP reports, for even small issues like the vendor invoice, maybe serial number, say IND 001, but in my system it will only show 001. So then there will be a mismatch, and even those kind of small issues will end up getting into this error situation, and that only increases the manual effort to reconcile and do a forced reconciliation. So in spite of whatever has happened so far, what we have seen, the companies still spend a lot of time on reconciliation. And if the government can do some changes to make this process slightly simpler, I think this will be a big sort of boost in terms of ease of doing business standpoint. The third one is, in many cases, in a month, if you only have a credit note and you don't have an invoice, which means you only have a negative figure, I think the returns will not take that figure. So that again is a big problem, especially for those specific cases. And the last, obviously, is the volume of compliance. Even if a normal SSE will have to at least file 2 returns per month, 1 and 3B. And if you have also ISD and job work, then your return will increase. So a service provider which till 2017 was only filing one return or two returns, two returns per year, and that's it. Now they're supposed to file at least 24 returns per annum, plus there is an annual return. So the volume of compliance has gone up. The amount of compliance, so the time spent on compliance has gone up, and the reconciliation only adds to that overall activity. So again, the people are hoping that they will eventually simplify the compliance ecosystem, make it more tech driven, so that the manual time that goes comes down drastically. So these are the broad open issues which we think have a wider relevance. There could be 100 more issues which you can keep on discussing for the entire day, but we thought, okay, let's discuss these issues because these have more wider relevance. So with this, I think I end my presentation. I'm already, I think 4:45. So I will give Karthik maybe half an hour or 35 minutes to talk about audit assessment, and then we can take up the Q&A. So Karthik, over to you. Thanks.
Thank you, Abhinav. So I'll share my screen. Yeah. Good evening. Thank you, Abhinav. Good evening, everyone. Before I start the session, I would like to thank IACC and all the members who are present in this call right now. The session that I will be taking up will be relating to audit assessments. What are the type of assessments that are there? And majorly, we will cover from the perspective of what practical approach and what are the practical challenges that we faced during handling assessment for our clients. And finally, we will also highlight on the issues that the authorities are picking up during assessments and audits, and then how we can be prepared if at all, let's say, if through our system changes or from documentation, how we can be prepared for any future assessments. So these are the broad areas that I'll be covering up as part of the session. So first of all, let's say we receive a notice. Let's say I'm an organization, I receive a notice. Today, the kind of notices that we are receiving, we will not be able to even identify what kind of a notice it is, because whether the notice is for audit or assessment, because what we are seeing now is they're asking both the authorities are asking the same kind of information. Okay, so for a layman to identify what kind of a notice that you're getting, basic thing, what kind of a form they are issuing it in, and under which section they are issuing, because it's very critical whether the notice that is issued is valid notice or not, whether there is a document identification number is affixed on the document or not. So these are the key things that you have to see when a notice is received. So very basic thing, let's say if the notice is issued in any form that says ASMT, then it is relating to assessments, wherein they want to scrutinize your returns that you have filed and want to identify what are the differences that is there in the returns that you have filed. If the notice is for ADT, which means they have picked up the organization for audit. So which is a more elaborate and wider area where they can review your entire financials and entire transactions of the year, and they can go beyond whatever you have submitted for GST purpose also. This is a basic difference between an assessment and an audit. And sections, I will not get into the details of the sections. For us, the focus area will be section 61 and 62, which is scrutiny of returns and assessment of non-filer of returns. And then assessment of unregistered persons, summary assessment. These are the cases where you get a notice. And then from an audit perspective, what kind of audit they are doing? Let's say an on-site or desk audit, it goes under the same section. The process is the same, just the manner of audit is different. One, you have to go to their premises, make all the submissions. Other, they visit your premises and complete the audit process. Special audit, inspection, search, seizure. These are only in special circumstances when the authorities think there is loss of revenue. There are some, the value involved is, let's say, more than 5 crores. Only in those circumstances they get into special audit, inspection, search and seizure. Okay. Now, what is the end result? An assessment can be concluded at the assessment stage itself. Let's say they issue a notice to you and you submit responses to them, which is satisfactory to the officer, then they can conclude the assessment then and there. Okay. An order can be passed under the assessment section itself. Audit, similar way, but any observations, any discrepancies that they are disagreeing, then it goes into section 73 or 74, depending on the issue, and a notice is issued to you, which is a demand notice under 73 and 74. Okay. Moving on, scrutiny parameters. Let's say now we know assessment notices are issued and audit notices are issued. On what basis the authorities are issuing us these notices, right? One, first, to start on assessment part, the authorities have a centralized unit which analyzes the data that you're submitting. Let's say your GSTR 1, GSTR 3B, and the annual return that you're filing, everything goes into this analytics tool, gets analyzed. Any discrepancies, they have certain specific parameters and percentage of discrepancies. Based on that, let's say your returns are red flagged. Okay, this information is periodically sent by the central authorities to the jurisdictional authorities. Let's say the commissionerate down below gets this information. They further scrutinize the data. They further analyze the data and send the data back to the superintendent who is handling your jurisdiction. Thus, jurisdictional superintendent picks up your GSTR 1, GSTR 3B annual return, checks it. If there are any discrepancies, he issues a notice to you. This is how assessment proceedings are triggered. So basic pointers, when you're filing your GSTR 1, 3B, whether it's your credits that you have taken for your reverse charge or the ITC, let's say when you're taking input tax credit, which is slightly higher than your 2B number, maybe because of a valid reason, right? Or you have taken credit on any input services which is pertaining to previous year. So all these things will lead to an increased input tax credit. But for authorities on a number-to-number basis, it triggers a red flag and they will issue a notice. If you have valid reasons, the assessment gets concluded then and there. Now the last 3 points, let's say registration is cancelled, right? This is a unique notices that we have seen where your vendor, his registration was cancelled at some point of time in the past for, let's say, 2-3 months, and then it got revoked. The cancellation got revoked. But what the authorities are saying, during those 3 months, he had issued these invoices to you. You have taken credit on it, so you're not eligible for the credit. They're going beyond what an assessment proceedings are. And even though the vendor has paid taxes on this, still they are challenging the credit eligibility in the hands of the recipient. And reversal under 4243, if your organization has any exempt supplies, okay, the chances of your returns getting picked up for the assessment proceeding is much higher, because they want to review the manner in which you are doing the 4243 reversal, the calculation methodology, what numerator you are using, what denominator you are using. They want to review these in detail. So if you are doing any 4243 reversal, then chances of assessment is much higher. Non-payment of interest and late fee, which is a clear red flag. Interest, if you have filed your returns late, obviously they say that you have to pay interest. And late fee for 3B returns, yes, at the time of filing of the return itself, you have to pay the late fee. But for annual returns, if you had missed paying late fee, notices are issued under assessment proceedings to ask you for the late fee. Now, coming to audit, the way we discuss assessment, audits, there is no specific mechanism that is prescribed. Like it is similar to what was happening in service tax or excise regime, right? In excise and service tax, there was no specific parameter, but the audit manual prescribes certain methodologies wherein we can assume, let's say you who are an organization who have high value of turnover, or you are a special industry. Let's say, for example, in the specific locality, for example, Hyderabad, a pharma company would more likely to get picked up for audit. Like similarly for Bangalore, it is mostly the IT/ATS entities which are having high turnovers and high refund amounts will get picked up for audit. So it is not a set parameters, but determined based on the location, based on the sector, and based on the size. So depending on these, every year, the Director General of Audit picks up certain criteria and implements them for audit. So the authorities down below follows these procedures and picks up clients for audit. So if somebody asks a question whether I will be picked up for audit, we will not be able to answer that question directly, but we can see these whether you are fulfilling these criteria. Yes, you may get picked up for audit. Yeah. So moving on. Let's say now you're picked up for audit, right? Abhinav, you're saying something? Yeah. So let's say we are picked up for audit. Now, what are the challenges that we are going to face? Let's say either in an assessment or an audit, okay? These are the practical challenges. It may not be from the law perspective or from some issue from the assessment authorities perspective. These are what we have seen when we have handled assessments or responded to notices. When the authorities came to our premises to do the audit, this is what we had seen. So first, multiple notices or multiple issues picked up by multiple authorities. There are too many issues, like when an assessment officer issues you a notice, let's say for a 2A3B reconciliation or for revenue reconciliation, you are trying to submit information pertaining to that. At the same time, audit authorities also issues you a notice and they ask you to complete information. Now, you are submitting same set of data with multiple authorities, right? So that becomes a challenge. And in these scenarios, we have written to the assessment officer saying, audit is already being conducted. All this data set is already given to them. Please stop the assessment proceedings. In certain circumstances, it has worked. In few cases, it has not worked. And in those cases, what we have done, we have given a copy of the same data that is submitted to the audit authorities, right? The second issue of multiple tax authorities. It's either investigation authorities, enforcement authorities, or if you're under LTU authorities, then audit authorities. Everybody picks up different points and initiates proceedings, right? Apart from this, you have C&AG also. C&AG may not have powers written down under the GST law, but constitutionally they can ask for any information, right? So like this, multiple authorities pick up each issue and issues notice to you, which becomes an concern for the organization, because for the same period, same issues, we are dealing with multiple authorities. Yeah. Next is summon issue to senior personnel. This is more of a practical issue. What happens is, if at all any notice is issued to you in a remote region and we have not responded to that notice, basically, first of all, summon is not issued as a first recourse. Okay, the authorities don't start the proceedings with summon. Summons are issued only after, let's say, 2-3 reminders. So authority might have issued your notice in some remote location. You might have not received it. Maybe the communication is lost in whatever medium. So for those notices, if you have not responded, after 2-3 reminders, they might issue a summon to your senior personnel in the organization. It is better to avoid this scenario, because whenever a summon is issued, they don't entertain any representatives to go before the authorities to attend the summon. So it is better have clear control over the notices that we are receiving, so we can avoid pushing the issue to the level of summon, right? Next is issues based on erroneous data. Okay, so this is again, this issue is not an actual issue, but it takes so much of taxpayers' time. See, there is a notice issued to you saying you have difference between GSTR 3B and 1, but in essence, there is no difference at all, right? So we have seen the scenarios where, as per my GSTR 3B and 1, I have no difference at all. It is matching to the dot, but the authorities has issued a notice. But when we go back and check with the authorities, the data that they have got, either it is outdated or it is an erroneous data. So these issues, even though it gets concluded at this level, unnecessarily the taxpayer has to spend that much of time explaining and responding to the notice and representing before the authorities. Next is non-speaking orders. this is happening mostly in refund related matters. When, let's say, for example, you have filed a refund for excess tax paid, right? And when you file the refund, you have submitted all the information, and the authorities issues a deficiency memo, which will not say nothing, right? The deficiency memo will say rejected without any reasons, or an order is passed, rejected without any reasons. So these are the circumstances where we can legally fight, because these notices or orders are not valid under the law. It has to be a speaking order or a speaking notice. It has to give base data, even in case of, let's say, best judgment assessment, where we have not submitted any information, they have to have some backup. So there are a plethora of judgments under the erstwhile law which says best judgment assessment under VAT also has to be done based on certain documentation. You have to have a basis to pass an order or issue a notice. So this, whenever we receive such notices, we have to fight it legally. Moving on, communication language and channel for notices. So what we have seen is, one, the GST law allows all kind of communication, right? The notices, if they are not able to issue a notice to you, the authorities can even publish this notice as in a newspaper where you have registration. So all kind of medium of communication is allowed under GST law. So we cannot complain about that. We have to be careful, and we have to ensure in whatever medium the notices are issued, we have a control over it. That is one. Second is, notices are issued in local languages. This again issue, when we spoke to the officers, they said the issue is mainly because of the systems that they have. So again, an issue which we will not be able to address immediately. We have to get it translated and respond to the notice. But it is an issue in the system right now, because the superintendent with whom we have spoken, they are like, the system that I'm using is the VAT system, sir, and this system can issue notices only in this language. So we are getting notices, let's say in Bangalore, we get it in Kannada. So such issues also we have to address, especially organizations having 10, 12 registrations in multiple states. They will have issues to address these notices. And next, simultaneous audit and assessment. Similar to first point, when an audit and assessment is picked up, Abhinav was highlighting on the point, a service entity who had only one registration, we are filing only 2 returns in a year. Now that service entity, if they have, let's say, 5 sales officers across India, it's an IT/ATS company, they just have sales officers in 5 states. There are 5 registrations. But their direct tax or indirect tax put together team might be 1 or 2 people. If an assessment is started, an audit is initiated, let's say for more than 2 or 3 states, the life of the person who is handling will become miserable, because the amount of queries, amount of documentation that the officers ask, the number of calls that they make to you will be enormous. So it is going to be a challenge of resources at the organization level if multiple audits starts for a service entity. Next is routine transfer of tax authorities. This was there earlier also. It is there now also. Now, I will give you a practical example. Like, we were handling a client in Bangalore, and for 6 months, we were making all the submissions. We would have done more than 8 to 10 representations. Like, we went before the officer, explained everything. After that, he got transferred. Now, it's like he has made his observations, but the new officer who's going to take over that role, he wants to review everything from the scratch. So the entire effort that was gone in for the 6 months, whether from the company's organization's end or from our end or from the authorities' end, it is in vain, because everything will start again from scratch. So this is one issue. There's no solution to it, but we have to live with it. Finally, the documentation related, all the data, let's say a sales register, purchase register, ITC register, yes, everybody has it, we submit it. But there are certain documents which is either impossible to create, or it is not there because it's not required under any other statute. The books of accounts, we don't maintain a state-wise trial balance. But the officers are insisting that they want state-wise trial balance to conclude assessments or to conclude the audits. So this one where either organization have to have the system should be able to give at least reports similar to trial balance, which will be bifurcatable to state-wise. And then the quantum of documentation. This is a mindset issue. The officers are not moving away from the VAT regime because they still think it is like verifying all the 100% documentation that they used to do, let's say for a C form or F form sales. They used to verify all the invoices. Now under GST regime also, they are asking for all the invoices either for purchases or sales, which is as a quantum, it is too huge for submissions. So we usually tell the officers, please take it on sample basis. For each kind of sales, we will give sample. Mostly they have accepted this, but in certain circumstances, we have faced challenges there. So these are few challenges based on our experience in handling or interacting with the authorities we have factored. Next, I'll move on to the issues. Let's say during the assessment process, what are the issues that they have highlighted? Abhinav has already covered on most of the issues that are open issues. But here, what I'm highlighting is only those cases where they have issued notices to us. Like these are, if at all your organization has any of these kind of transactions or these impacts, then possibility of you getting a notice is much higher. One, turnover related, taxability of transactions. If I have to give a quick example, if you are an IT/ITES sector, intermediary is the point. Intermediary, they can question you on taxability, right? Like that, for each industry, you have different kind of taxability questions. The authorities question on that and issue notices when they review your turnover. Next is GST 1 versus 3B, GST 9 versus 1, GST 1 versus 3B versus e-way bill. All these are discrepancy related. So you get a notice if there is a discrepancies in these forms that you have submitted. Possibility of you getting a notice is very high. Similar to turnover, input tax credit. Again, one is reconciliation between 2A, 3B and 8A, 8B. 8A, 8B is nothing but again 2A, 2B only, 2A and 3B. But what you have reported in your GSTR 9, okay? So if there's a difference, we have seen notices directly saying, a notice is issued saying this is the number as per 8A, this is the number as per 8B, this is the difference. Explain us why we should not demand this amount. This is the kind of notices that we have received, input tax related. ITC reversal on exempt or FOC supplies. Abhinav explained that while discussing the issues. We have received notices on this. And ITC eligibility, blockage of ITC and Tran 1 review. Eligibility and blockage of ITC is happening very frequently, the number of notices that we have received. Tran 1 is something very critical. If I have to bifurcate, let's say kind of notices that we have received, let's say one, you have turnover related, one more, you have refund related, and Tran related is in line with Tran 1, much high. And unfortunately, we don't have much data also. Let's say today, if you have to download the Tran 1 that you have filed, it's not possible. You have to go take screenshot of the form that you had filed. And we didn't have much clarity to file credits in which row or which table. The authorities are challenging from that perspective also. You have put the turnover amount or a credit amount in a wrong table, so you will not get the credit. This is the kind of queries or issues that they are raising in Tran 1 review. Next, reverse charge related P&L. They will take, let's say, legal services. They will say, on these legal services, have you paid reverse charge or not? A reconciliation has to be done. Authorities don't appreciate that if I put something as legal services, it will have a lot other professional services related invoices also, which is charged under forward charge, but they ask us to give a complete reconciliation with the P&L number. Same applies to your, your related party transactions. Let's say you have import from a related party. You have showed it as part of your related party schedule in financial statement. They ask you to do a reconciliation with that. They don't appreciate the fact certain transaction with third parties may be on accrual basis. certain transaction may be on receipt basis, right? So you have to have a clear documentation on what you have paid reverse charge, on what you have not paid reverse charge. That bifurcation has to be done at the financial statement level for assessments. Okay. Next, refund related. Quickly 2 points. SEG related refund, few High Court judgments. Officers are accepting the refund application, but still we have to get refunds. And then GST on capital goods. So initially, even by mistake, if we had applied for refund on capital goods and they've granted it, right? Now, if I have to pay back, what amount shall I pay back? Because if I have to just take directly the entire amount of capital goods ka credit, that will be much higher because the refund I got is a proportionate refund. So what is the proportion of capital goods which was unutilized, which was granted as refund? Identifying the amount is a challenge. And then FIRCs. So RBI has clarified that FIRC is not a requirement anymore. So whenever you receive a foreign exchange, you get an advice. It is not an FIRC. You get an advice through an email, which is as good as a document for receipt of foreign exchange. But officers insist on FIRCs or BRCs. So for any refund claim, we end up going to the banker asking for a certificate or a BRC. So this issue has to be addressed through some clarification saying RBI is saying advice is enough. So for GST purpose also, they should accept the advice, remittance advice as FIRCs. Finally, transaction based. Abhinav had clearly covered GST on notice pay recovery, liquidated damages, and cross charge. The other two issues, corporate guarantee. This we have seen in recently. Let's say a holding company is there, they have their subsidiary. They want to give some guarantee to the subsidiary for taking a loan, right? And from accounting standard perspective, you recognize the revenue for this, like the interest revenue. Authorities are demanding tax on this revenue, which is recognized only for accounting standard perspective. So that is also one element we have to be keen on. Finally, on usage of brand. All your subsidiaries use the same brand name, right? So for this usage of brand name, whether cross charge is required or not is one question. But authorities have issued notices recently saying that this is a service rendered by your head office to you. You have, for the usage of the brand name, you have to pay GST. So these are the issues that we have noticed. Now, the final point on how to be prepared. So we know what are assessments, like what are the issues that has been raised as part of assessments. So we can be better prepared. Let's say if an organization has not received these notices, or you've already received, and for the future periods you don't want to face the same challenges, it's better we prepare for this assessment as well as for audits. So first of all, majorly it is all your notices and submissions at a central server. You use a solution or it's a common portal. Somewhere you store all the submissions, because one employee leaves the organization and you obtain registration, get hold of the submissions that you have done or the notices that has received. Next, get the notices and communications in a digital manner. Let's say a notice is received in one of the states. Ensure these notices are scanned, sent to the right person, right? Because if it and he has put it in a file, after the head office is not even aware of the receipt. So digitize the process. Inform all your officers, set a process where if they get a notice or a communication from the authorities, ask them to scan that document, send it to the right person in the organization, so that person takes care of the entire digitization process. Yeah. Next, this is a very simple point, but most critical point also, because when you're filing your GSTR 3B and GSTR 1, at this stage, if we keep our documentation in such a way that it is ready for assessment, then we will avoid 90% of the issues. When you're preparing your GSTR 1 and 3B, if you know that there is a difference, note it down. Put the difference reasons in the GSTR 3B working file. Keep all the backup files in one folder for GSTR 1 and 3B. At this stage, keep in your mind that how the assessment authority is going to look at this working. Okay. If you do that, we will be able to avoid most of the issues. So on a monthly basis, whoever is preparing GSTR 1 and 3B or generating e-way bills, ensure that you act in the basis of what an assessment authority is going to look into. Okay. Next, maintain complete ITC register. Again, very simple point, but most painful point as part of the assessment and audits, because the registers that the ERP is providing today, it may not have description, it will not have HSN, it will not have correct GST number of the vendor, or the invoice number that is captured by the personnel in the organization may not be complete. It may be correct, but it may not be complete. So these are the issues that we have seen. This has to be addressed, because ITC register is one pain point where we have seen and we have fought with the authorities, but this issue is not going to go off unless we address the issue through our system. ERP has to be updated to give a ITC register that I can directly submit to my assessment authority. Next is 2A 3B reconciliation, which is a very routine issue. Reconcile RCM expenses with RCM liability. I covered this point sometime before as part of the issues. Perform annual reconciliation with revenue with tax. So basically, when we are doing a revenue reconciliation for 9 and 9C purpose, you ensure that you reconcile the taxes discharged. We have to even keep in mind all the taxes that was discharged through DRC 03, because we have seen scenarios where somebody in the organization paid using DRC 03, but that was completely ignored or not noticed at the time of 9 and 9C, and the organization had paid tax on it again. So keep all your tax paid documentation in one place and keep it as part of your revenue reconciliation. And then ensure you do an annual review of your tax positions and documentation. Either include it as part of your internal audit process or include it as part of your 9 and 9C filing. But ensure, let's say you have so-and-so transaction. This is my revenue. This is my expenses. For these revenues, this is a tax position I'm adopting. You can adopt a, let's say, a very aggressive position or a conservative position, but it's up to you. But document these positions. So tomorrow when an assessment happens, the management knows this is the reason why we have taken this call, right? Then maintain supporting documents for all benefits that you're availing. If I have to give you a simple example, let's say your organization is currently making a sales to an SEZ, right? SEZ says, give me invoice as zero rated supply, and you give the invoice as zero rated supply. A sales team does this, and you are, it comes to the finance team or tax team later, and you file your return. But at the time of assessment, authorities ask for authorized invoices. The zero rated benefit can be given only if you have the invoice that has been authorized by the SEZ officer, which is signed and sealed by the SEZ officer. Without that, they will deny the SEZ zero-rated benefit to you. It may not be like it may not test the law, or at some higher forums, they may hold that in essence this transaction is a zero-rated supply. But at the lower level, initially, officers are raising this issue, and one of our own client itself, they've issued a show cause notice itself saying, you have made SEZ supplies, but you don't have this backup document. So we will make you pay the entire 18% tax on that sales. Similarly, wherever you are supplying, let's say you are taking a refund claim, or you are making supplies to EOU or AA, or taking any conditional exemption, ensure you have all the backup documents before taking those benefits. Okay. So with that, my session gets over. So thank you everyone. So ICC, Shika, I think you can take it now for Q&A.
Yeah, thank you so much. Thanks to both the speakers for such a detailed presentation and so much information, which is, I think, very, very helpful for all the industry members and our guests. So now I request, I think we have some questions in the chat box. And would you like to take from the chat box, or how should?
I'm just checking.
So we have one question. Can we use ITC of one state for another state?
So I think, Karthik, I've already responded to some of the questions.
Okay.
But let me just repeat, and then maybe you can take up the rest. So
Sure.
Interstate transfer of ITC is not allowed as of now. What is being allowed is interstate transfer of cash balances, that too subject to certain restrictions. As of now, ITC interstate transfer is not permissible, but I think it's just a matter of time, hopefully, when this also will be one of the options. That is one. Second is, I think, let me just take a couple of questions. Canteen services, I think the question is that whether we need to pay GST on recovery. I mean, there is no straightforward answer. If you have not been paying GST so far, then you should ask yourself, what is the trigger point for you to pay GST? Because if you have taken a call based on some reasoning, you will have to, just revisit that reasoning and see if something has changed for you to review. Otherwise, if you really want to pay, then, and if you're not paying so far and you want to pay now, then you will have to pay for the past period also, along with interest. And that is one. Second is that even if you pay on the amount which you have recovered, they might still come back to you and say you should pay on the fair value. Now, the fair value concept may not bother you for an insurance recovery, but it may still be relevant for a canteen recovery or transportation recovery, because there, typically there is a concessional rate which is being charged from the employees. So that's on the canteen. So what I'm only saying is that if you have taken a call not to pay tax, and I'm sure there must be some well-documented opinion on record which you have as part of a fine note. You just have to check the reasoning why you took that stand, and then you can take a call. Just because there is one ruling which says it is taxable or one ruling which says not taxable, you can't be changing your stand, because every other day there is one ruling which says something is taxable, something is not taxable, and then become difficult to keep a track. So one option is either you go for advance ruling yourself if you think the amount is very large, and get a ruling which will be applicable to you, and then you take a call based on that ruling. Otherwise, unless there is some major change in the fact pattern or in the reasoning that you have taken earlier to take a stand either which ways, whether to pay tax, not to pay tax, don't just change your stand based on one or two advance rulings, because they are very, very specific to the SSE. We are DTA unit supplying to goods to, okay, Karthik, you want to take this up? We are DTA unit supplying goods to SEZ units. Now audit section is asking documentary evidence. Yep. What's the document I need to submit? Yeah, Karthik. Question, I think.
So this is the exact issue that I had highlighted. So basically what you have to do, you have to ask your recipient, your customer, to get the invoice signed by the SEZ officer, authorized by the SEZ officer, which he has to do for entering any goods into SEZ. You would have already done it. Get a copy of that invoice and submit it to your authorities. That will suffice the requirement.
Received
so next question.
Yeah, Karthik, go on. Sorry.
Next question, received demand for payment of 3 lakh, including interest. We have sufficient ITC on end of demanded year. Can we request interest waive off? There is no provision for interest waive off, first. Second, this issue is getting more prominence because of yesterday's notification. Even in yesterday's rules notified, this issue is being addressed. Now, there are two ways you can take it. One, either you go by the judicial precedents. There is a Madras High Court ruling which says if you have enough ITC balance at end of each year or each period, then you don't have to pay interest. That is one view. Other view, if I go strictly by the law, then you have to pay interest, because unless you disclose that liability in the return, in that period's return, and you have not disclosed it, let's say by payment of cash or credit as part of that monthly return, then you have to pay interest. So that is another view.
So just to add to what Karthik,
yeah.
So just to add to what Karthik mentioned, I think, and I mean, we are still going through the notification which were issued yesterday and the circulars, but I think somewhere in the yesterday's circular, I think they have taken the second or the latter view, where they're saying that unless it is a current year liability which you're current tax period liability which you're discharging, there you can claim this adjustment of ITC balance that you have. For a past period liability, you can't claim this benefit. That's a view which is coming out, but we still are going through the literature, and we'll need some time to sort of come back to you. Yeah, Karthik, back to you.
So next question, we are paying tax on reverse charge. For taking the ITC on reverse charge paid, our consultant asked us to raise self-invoice, which we were not able to do in GSTR 1. How to take ITC? See, on reverse charge 1, you can take ITC and you have to create these self-invoices. You don't have to disclose as part of your GSTR 1. So you can just create an invoice, which is a self-invoice, and take the credit as part of your 3B. So that will solve the issue. Again, next question from Abhinav Srivatsa. Okay.
No, this is okay. You can skip this. We are retail units applying costs to you. SEZ unit refund applied or not? I mean, you are saying whether you can get refund. I think you can, but there are some conditions to be met before you file for refund. Then, will there be any impact of 194 in GST? It's not a straightforward answer, but it could be a case, because if you want to restructure your benefits which you have been giving to distributors or your customers, or to retailers or intermediaries, based on the nature of benefit that you eventually decide, I think that will also have an impact from a GST standpoint. For example, in the session we mentioned that if you give something as a gift to distributor, you will have to reverse ITC, but that condition is there only for goods. If you give a holiday package to the distributor, okay, or some other service package to the distributor, then this reversal requirement is not there. So it will have an impact, and that will depend upon what exactly you are sort of doing in terms of restructuring of those incentives. Can we issue credit notes now for invoices which belong to the previous financial years after filing of return, filing of annual return? I mean, so there is a time limit, I think, which is as of now 30th September of next year. So if you have crossed that time limit, then I mean, you can issue credit note, but that's a commercial credit note. You can't claim any GST benefit. This question is repeat.
Mr. Karthik, can I request you to remove the PPT, please?
Sure.
Thank you.
GST implication on secondment employees. Again, there is no one-line answer. There are contrary rulings. A typical secondment where the employee which is seconded remains on the payroll of the company which is sending the employee on reputation, that kind of arrangement is normally taxable. At least authorities want tax, though there are rulings which say that in certain cases the seconded employee works under the control and direction of the recipient company, and therefore he is for all practical purposes employee of the company. So in that case, the ruling has taken a different view. So we have to just see the facts, and based on the risk appetite, you will have to take a call. My view is that if he remains the employee of the company which is sending that person to for secondment, then I think exposure is or risk is high. Is GST payable even if corporate guarantee provided by holding company is not fair valued as per? Yes, yeah, it is ideally payable, but I don't think a lot of people are not paying, to my mind. So it's again an open issue which will have some ramifications. I think is it time for issuing September, November? I think it was proposed as November, but I'm not sure whether they have given effect to that provision or not. Maybe now it is November, but till few days back it was.
It's November.
November now, right? So it's November, yeah. No,
so there is a confusion there also whether it is October return filed in November or it is November 30th itself. That question is still there.
Yeah. So it's already 5:30 now. You want to sort of. Yeah.
I think we have addressed all the questions.
Yeah. Yeah, Shikha, you want to sort of do the closing sort of?
Yeah, sure. So in Q&A box also there were questions. So I think it is a more of a repetitive.
So you can, you can mail it to us. You can reach out to us separately.
Fine,
sure. We're more than happy to answer.
Yeah, sure. So I think we have covered the main portion, and also the speakers have covered the Q&A. So it's now time to say thank you. And we really thank both our speakers. And on behalf of Indo-American Chamber of Commerce, I really thank both of our expert speakers for the session. So, just one. Yeah. Okay. So we want to thank Mr. Abhinav Srivastava and Mr. Karthik Mani for joining us today and sharing so much knowledge with our members with such a comprehensive presentation. And a special thanks to our knowledge partner, BDO India LLP, for supporting today's session. I also like to thank Mr. Shrikant Badiga, Regional Vice President, IACC, for his valuable time and gracious presence. Last but not the least, I thank all our members and guests for their gracious participation. And thank you one and all. And so now I think we'll be sending the PPTs you will get from IACC or from BDO, so that the PPTs will be there with all the members and guests. And in case of any questions, you can write directly to BDO or you can write to IACC, and we will forward the questions to the speakers. So thank you so much for today's session.
Okay.
Thank you one and all.
Thank you.
Thank you.